Hi everyone, welcome to Tuesday. And of course, every Tuesday we take a look at the performance of the NZSX50, being the main board for the New Zealand Stock Exchange. Just before I jump across though, just remember that this is for educational purposes only, definitely not intended to be personalised financial advice. If you are wanting personalised financial advice, then you do need to go and have a chat to your own financial advisor or share broker or the likes. Right, let's take a look. As you can see here, I have got the main board for the NZSX50 up on the screen. Now, I am recording this Monday morning. The market's been open for around 15 minutes and it's already up about $111 or 0.85%, so not a lot. Now, just taking a quick glance here at the performance for last week, you can see a very sort of small doji just appearing there on the screen. It looks like the market hasn't really done a lot. It's almost like there was a bit of buying, a lot of buying, a little bit of selling, but it almost opened at the same price that it closed last week. So it means we've got a couple of dojis there in a row. But what I wanted to point out to you is a couple of things when I look at this screen, and that is that dash line at the top. And that is just showing where the market is trading at the moment. But if you cast your eye along, you can see that we're at that line at the moment. We've hit it last week. We also hit it at sort of around December last year. We went up and hit it, but closed below it back at the end of November last year. And then if we carry on along, we can see here back in September 2021, we've hit it another 3 or 4 times, might even be 5 times. That is definitely a line of resistance. It all indicates if we can break through that line, then potentially we will be in a bit more of a bull market, which is what we want to see. The other thing, if I look down the bottom here, these bar graphs down here, they indicate the volume that's been trading on the New Zealand market. For the last couple of weeks, we've had some quite strong volume up here. Looking at those last 2 weeks, and that is quite strong. That is a good positive indicator, especially given that those bar charts are green, which means there are actually a lot more buyers in the market than what there are sellers. And that's something that we do want to keep an eye on, because if we've got more buyers in the market, then that is what drives a market up. So that's a very good sign. The other thing we want to take a look at is the ATR, which is the average trading range. And we just want to see how much volatility there is in the market. So let's take that figure of 262.35, divide it by where the market is currently, which is 13,231.66. And if we times that by 100, it gives us about 1.98%. So just under 2% volatility. That is great, because anything under 5 is really quite good for a market. Let's pop our moving averages on. Again, we will change that to 30, exponential, great. And you can see here that the market's definitely trading above that 30-week exponential moving average, starting to get away from it a little bit, but that is quite okay. It means that the market is potentially in an uptrend, which is what we want to see. What we don't want to see is when the market is trading below that line, because that can mean that we're in a downtrend and markets can obviously continue to keep falling for a lot longer than you and I can remain solvent for. Now, I've just also popped up here the 15-week moving average. Again, that 15-week moving average has crossed through the 30. You can see there that the blue line is above that red line. That is a good positive indicator. And again, the market, overall market, is trading above that as well. So again, good positive indicators. Let's go on to the 1-year chart and just see how that is performing. And that brings up daily candles for us. You can see on this particular one that we've got a little bit of a curvature happening here. Whether that means anything is going to happen or whether it's just simply the market taking a bit of a breath, I can't answer that. That's obviously only something that time will tell. The big thing that I'm looking at here, though, is that the market is trading above both of those. and the blue line being the 15-day moving average is trading above the 30-day moving average. Those are good positive indicators. I wouldn't tend to read too much more into anything like that. We haven't got 2 red candles in a row on a daily chart. We certainly don't have too many red candles in a row on the weekly. In fact, when you look, there's more green candles showing here than red ones, which is really good, which is something that we want to see. Let's take those moving averages off. Now I'm just going to pop up here as well the FNZ. This is the Smart Shares top 50 companies, and sure, it is mirroring pretty much what the main board is doing. The difference between this one and the main board is that it has a capital exposure of 5% maximum to any one share. So our board is heavily weighted to the likes of Spark and a few other top performers. And so if you were investing solely into the NZSX50, then that indices would be weighted according to the capitalisation of each individual share. What this particular one does, being FNZ, it smooths it out and it gives a little bit more of an even weighting across all of the participants rather than just weighting it to several few. And what you've got here is the equal weight is trading below what the main board's doing. So what that is really saying is that whilst we've got some good strong runners in there, and I definitely know Fonterra has been an absolute stellar performance so far this year, it's been shares like that has been driving the overall market. We're not seeing a strong participation through most of our top 50 companies, which is something that we would like to see. However, don't let that deter you, because at the end of the day, there are some good buying opportunities in that out there. But I'm just demonstrating that we are not having a broad participation across all the market participants. We're only seeing a handful that is driving our market. So, hey, I'll stop there. I hope that's helped. Come back on Thursday. Last Thursday, I just happened to use Mercury Energy for the fundamental analysis that someone had asked me to do. No other reason other than it was a ticker code that was showing on my screen. This week I thought, actually, let's go back and have a look at Mercury and we will do a technical analysis on it. And the reason I wanted to do that is because both methodologies will work. It's about choosing what's right for you, but both methodologies were actually giving quite varied responses as to whether you would be wanting to buy Mercury Energy or not. So come back on Thursday and take a look. Let me know what you think. And also let me know if you are getting some value out of these videos, because I do enjoy making them, but I want to help you in your educational journey with share trading. So let me know if there's any questions you would like me to help you with. Happy to do that. Or even if there's any shares that you would like me to review. Again, I'm happy to do that as well. So until Thursday, take care.